Good afternoon, ladies and gentlemen. Welcome to Magic Bricks webinar series, our endeavor to trigger a buy and bring back consumer confidence in the real estate market. We have initiated a series of webinars conducted by industry experts to give you all a crisp insight of real estate industry. The topic of today's session is how to use data to make a wise property investment. Our guest speakers today is Jayashree Kurup. She is a head of content and research department, Magic Bricks. She has been a business journalist for over 2 decades with the Times of India, the Economic Times, and the Financial Express. She forayed into research in 2002. She is a regular guest columnist with a number of established media, including the Times Group and others. Along with her, we have Rohit Watts. He's an experienced real estate professional with over 10 years of experience in Indian real estate sector. During this period, he has served in various capacities handling commercial space transactions, real estate consulting and valuation, education and healthcare advisory, and real estate research. Previously, he has worked with leading international property consultancy firms like Cushman and Wakefield and Knight Frank India. We will start the session with the presentation. Today's presentation has been made by Rohit Watts. Over to you, Jayashree.
Thank you, Neha. Good afternoon, ladies and gentlemen. Magic Bricks has been coming out with the PropIndex report every quarter for over 4.5 years now. This is the 18th edition of the PropIndex, and a lot of industry people have been using the PropIndex for various reasons. We thought it is a good time to step back and see how the PropIndex assists end users and how end users can make the best of data that is available to them so that they can make the right property decisions. Over to you, Rohit.
So what we have over here is the PropIndex report that was prepared for the month of October, November, December 2015. Where we had covered various aspects of price related to 14 cities across the country and evaluated this particular aspect in detail. Now, as an end user or an investor in real estate, it is important that you have access to data and you understand the data which can help you to take an informed decision. It is important that you understand what are the price trend prevalent in the market so that you buy at the right price or you can sell at the right price. You understand how the market has evolved so that you know whether you are at the trough or a crest of a cycle, and you can also choose your localities, your budget segments accordingly depending upon what is the objective of your investment in real estate. Now, what we will be doing in the present exercise is that we will take you through various graphs that were prepared, which tell the story about price movement in a given city.
We have taken Bangalore as a study, a sample study, but the same data is available for 14 cities across the country.
So, proceeding further, so the first, when you look at the PropIndex report, the first section or graph that you see talks about the property distribution by capital value. Now, what you have in front of you here is how is the budget-wise distribution of properties available in the secondary market. So today, if you were to look at, if you're looking at Bangalore to buy a property for self-use or for investment purpose, you looking at this graph will tell you what is the kind of availability in your budget segment. When you look at this, graph, you see that almost 60% of the properties available in the Bangalore market are in the rupees 4,000 to 5,000 bracket. Now, this is the largest segment in Bangalore, which is spread across the entire geography, and this is the price range in which you will find maximum options in the city. Towards the lower end of the budget segment, again, you have in the 3,000 to 4,000 category, you have around 25% of the or a quarter of properties available in the Bangalore market. When you take these two budget segments together, what you find is that almost 85% of the Bangalore market is in 3,000 to 5,000 category. So if you're looking at Bangalore market from an investment purpose or even from an end use purpose, this is the target segment, or this is the segment in which you will find the maximum supply. And this is what spread across almost all the localities in Bangalore. I mean, Bangalore being blessed with a radial geography, and it can expand in all the directions. So across almost all the cardinal directions, you will find that properties are available in this range.
So consumers, if you have a budget of 3,000 to 4,000 or up to even 5,000, and you're looking for property, you can be rest assured that in the city of Bangalore, there are plenty of options for you to choose from across the city. But the same may not be the case in another city. You may find that in some cities, your budget may be one, and the maximum supply is in another category, which makes your search more difficult. However, it also allows you to understand that if there is a lot of supply in your category, you will also be able to get more options to choose from.
The city price index basically is an indicator of how the prices have moved overall in the city. Now, one needs to appreciate the fact that real estate is not a homogeneous entity. What you have is each city has different budget segments spread across different localities across the city. Now, if you want to understand overall how the city market has moved, what we do is we basically amalgamate all these different budget segments into one indicator and see overall how the city real estate market has moved. So in this case, what you have is if you see the index performance between September 2015 to December 2015, what you see is that the city index has moved by 1.8%. What this basically means is that overall the prices at Bangalore level as a whole have moved marginally, and this is reflected in how the index has moved.
The last few quarters have been a tumultuous time for the real estate market across the country. The index, it is likened it to the stock market index, where you read or hear every day how the stock markets have performed, whether it's moved up or down. Property markets do not move on a daily basis. Currently, we see that they actually move on a quarterly basis, and that is the reason why the PropIndex indexes all the properties available in the city to a single value, so that you can assess whether how the city market has performed. If you look at what this chart shows, from September 2013 to December 2015, there's only been a 3% rise in values. However, not even 3, slightly less than 3. However, if you look between September to December 2013, there was a 7% drop in values. These same values went up significantly in the March 14 quarter. In the December 14 quarter, it dropped again. But overall, there has been a rationalizing of values. Property values respond to many local stimuli. For instance, global either the demand patterns drop because of global economic reasons, and Bangalore is a classic case of how global economy impacts the local buying cycles. But overall, the Bangalore market has not crashed. It has been a fairly stable market, fairly even market, and therefore anyone who has invested, do not exit a market during the down cycles. Wait for the markets to stabilize before you exit a market.
Yeah. So if you are looking, if you want to understand whether this is the right time to buy a property in Bangalore, looking at the index can tell you that the prices have been fairly stable, or in fact stagnant even, and the market has not moved. Another purpose of index is whether if the index is going up, it shows that the underlying prices are moving up, and if the index is going down, it shows that underlying prices are going down. So this is an overall indicator of how the market is behaving. What we have next is how this city index has moved over long, medium, and short term. When we say long term, we are talking about the movement of index from September 2013 to December 2015. and short term is from December 14 to December 15, a 1-year period, and quarter is the quarter ending December 2015. So if you see the long-term trend spread over 9 quarters from September 13 to December 15, what you see is that the index has barely moved. It has seen only a 3% increment, which basically means that the underlying prices during this 2-year period have hardly seen any increase. So your Bangalore real estate market has been almost stagnant in terms of the prices. What this means from an end user perspective is that the prices that are prevalent today are almost at the same level as they were 2 years earlier. And if you take inflation into account, the chances are that the property prices today are in real terms lower than what was the property price 2 years earlier. Coming to last 1 year, on the contrary, has been slightly more positive for the Bangalore market, and we have a 10% increment in the index. So prices have moved somewhat in the 10%, somewhat in last 1 year, and we will come to a point where we see why which budget segments had actually seen this increment. Last quarter has been fairly conservative, and we have had around 2% movement in the city index, meaning the prices, there has been some positive movement in the prices. The present slide shows how the individual budget segments have moved in last 1 quarter in Bangalore city. As we said earlier, your city index is an amalgamation of the price movement that happens in individual budget segments. So while an index gives you an overall picture, if you want to understand how individual budget segments have prices in individual budget segments have moved, we look at this graph and we see which budget segments have seen an increment in prices in last 1 quarter. So if you look at the present slide, you see that the luxury segment in Bangalore, which is greater than rupees 9,000 per square feet, has seen a 7% appreciation in last 1 quarter. The other budget segments, specifically your entry-level budget segments from 3,000 to rupees 5,000 range, your average increment in prices has only been 2%. So if you are an end user, or if you are an investor, and if you already have an asset, and if you want to understand how your property, where does your property value stand, this will tell you, depending upon your budget, where your property value stands. And if you're looking to if you're targeting any specific budget segment, this again will tell you how that particular budget segment has moved.
So a rise in prices is not necessarily always good. The above rupees 9,000 segment is the one which has seen a 7% rise in values and has actually turned an index. However, when you have to compare this along with the demand patterns, is the demand for this so high as well? If it is not, what happens is that developers raise prices, but consumers do not consume them, and then this leads to a situation of oversupply. Therefore, if you have purchased a high-value property above 9,000 per square foot property in Bangalore, the chances of your prices have, notional value having gone up is very high. But you may find fewer buyers for that property. So this is one way of computing whether you should exit the market or stay invested.
This section actually shows the 2 top most preferred localities within each budget segment. So this is an indicator of how the prices have moved in the localities which are most preferred in each of these budget segments. Now, while overall the price in a particular budget might have gone up and down, how the most preferred locality has moved actually tells you whether the consumers are interested in this particular segment or not. So, for example, in rupees 6,000 to 9,000 segment, Koramangala is amongst the most preferred locality, but there has been a 12% decrease in prices in this particular locality. Similarly, Hebbal in North Bangalore has again seen a 2% decrease. So, if the prices have gone down in 6,000 to 9,000 segment, you know that it is because these most preferred localities have seen a drop in prices. this budget segment has not done well. So you can actually you need to actually go beyond the overall number and look at the performance of each budget segment, each locality, to see how the prices have moved in the locality.
So consumers, it's very important to understand what your preferred budget segment is. If you were actually looking at buying in the 6,000 to 9,000 per square foot segment, please remember that in that category, if the values have gone down, this is a good time to enter that market. On the other hand, if your budget was 5,000 to 6,000 and you see that there has been a slight increase in the areas in JP Nagar and BTM layout, you know that the values are going up. You should not wait more because this is the values can go up further.
The price trend basis construction status actually shows the behavior of consumer in today's market. Now, one of the biggest casualties of the slow trend in the real estate sector over the last 2 years has been that the consumer has lost confidence on the market. There has been inordinate delay in the project delivery. And what that has led to is that while the consumer might still have the desire and the purchasing power to buy an asset, he is afraid to put money in an under construction project because he is not sure of the delivery timelines. And if you're not sure of the delivery timelines, then apart from the pre-EMIs or the EMIs that you are paying, you will also continue to pay the rental, and you will have to suffer because of this double outflow that will happen to you as a buyer. So what we have, so today we have a situation where a consumer is willing to pay extra for a ready to move in property, where he knows that the property can be occupied or consumed immediately, and there is no development risk. So if you're looking to buy a property today, the chances are, and if it is okay with you to wait for a certain period before the property becomes available, the chances are that you can actually get a good discount on the under construction properties because they are, as it is, not being preferred by the end user.
And normally, what you would like to look at is, do I need to wait when I buy a property at the early stages and wait for development to happen? Earlier on, we found that people entered the market at early stages of launch and waited for the project to be completed. Over the last year and a half, the kind of delays that have happened, in some cases in certain markets there have been up to 5 years of delay in projects. As a result, the consumer feels that it is better to pay a little more and buy a property that is ready to move in, and today the market is flush with stock. So if you are actually looking at picking up a property, this is probably a good time for you to enter the market.
When we in this section we look at the long-term trend in the various budget segments in the city, and this basically tells you what has been the movement in various budget segments, which budget segments have done which have seen higher price movement vis-a-vis other budget segments in the city. So when we look at this data, we see that almost all the budget segments have been fairly stagnant, and the price movement over last 2.5 years has been pretty low. So if you had already invested in the real estate sector 2 years earlier, you are likely to find that the return on your investment over this 2-year period has been fairly low to negligible. And if you have, and on the contrary, if you are an end user who's looking to buy a property, then this shows that this is the right time to buy a property because the prices are almost at the same level as they were 2 years earlier. So you could not have got a better deal. So while the developer might not have explicitly reduced the property prices, because the prices have been stagnant for 2 years, in real terms those prices have gone down, because once you take inflation into account, you will find that what costed 100 rupees 2 years earlier would cost less than 100 rupees 2 years hence because of the inflation. So the market is pretty much at its lowest level, and if as an end user you're looking, or if you are if you're a fence sitter who's thinking of buying a property, maybe this is the right time to buy the property when you can secure a good deal in the market.
Also remember that if you have bought a property sometime in 2013, this is certainly not the time to sell your property because you haven't got the estimated value out of your property. Property is not a very liquid asset. It is something that you have to hold for a long period of time and never exit a market when the economy is on a slowdown or when the market itself is slowing down considerably, as has happened in the last 2 years. Real estate is a cyclical process. Don't lose heart. The minute that there are economic factors that bump up jobs and bump up salaries, the property is something that consumers always need. Therefore, hold on to whatever investments you have made and wait for the markets to rise. They will rise. It's just a question of how long it will take to rise again.
So while previously we had looked at the price trend in different budget segments, here we look at the price trend in the top 5 localities by consumer preference. Now, when I say consumer preference, we are here talking about the share of these localities in the searches that happen on MagicBricks for properties, and these are the top 5 most preferred localities in Bangalore. Now, when you look at the price trend, you see that apart from Indiranagar, which has seen an increment in price, almost all other localities have been fairly stagnant in price terms. We proceed with the hypothesis that the localities which have the highest share of consumer search on our portal are also the localities which are likely to have the highest number of transactions in that city. So a flat market where the rates have not moved or have seen only a marginal increment in price over last 2 years, it shows that the underlying transaction activity has dried out, or the numbers has drastically reduced compared to what was the scenario earlier. Which again brings us back to the point that since the price in these localities has been stagnant and it is almost at its lowest level, if you are looking to buy properties in any of these localities, maybe it is a good time to go and negotiate a good price for yourself and get a property of your choice.
Consumers do notice that in a city like Bangalore, economic drivers are a big push to the property markets. Out of the 5 top localities where consumers are looking for property, 3 of them are directly driven by the IT boom. And Bangalore being the Silicon Valley of India, you do understand that IT and allied services are the ones that push the property markets the most. Indiranagar is a relatively new entrant into this property demand, and we find that Indiranagar has today become one of the hotspots of the city as far as entertainment and lifestyle goes. Lifestyle and entertainment hubs always tend to do well, and that is probably one of the reasons why the Indiranagar market is doing well.
Another, just to add, another point with respect to Indiranagar is that the scope of new development is limited in Indiranagar. And since it is a premium locality and a sought after locality, so whatever little supply that comes up into that market is likely to get consumed, and that is why the prices will hold or see an increment. In this section, we look at how the prices have behaved in the top 10 localities in Bangalore by supply. Supply over here means that these localities have amongst the highest actively traded properties in the Bangalore market. And what we see over here is that barring 4 localities, all the other localities have seen a price change. Have seen a price drop. So this basically points to the fact that again, the supply available in the market is likely on the higher side vis-a-vis the kind of demand that exists today, and the properties are available, at a discount vis-a-vis what they were earlier, because you have a situation where the investors would be willing to give you discount and exit the property, and exit the property.
So if you are looking for a property in North Bangalore, Thanisandra, Hennur Road, Yelahanka, these are all places which are high in demand, lots of supply, but the prices have dropped. So if you are looking to enter these markets, this is a good time to enter these markets.
We have, in this edition of our PropIndex, we have tried to calculate affordability through the rental yield perspective. See what is happening. What has happened in the Bangalore market, as was visible in the earlier slides, is that the prices have pretty much remained stagnant over last 2 years. However, this has not stopped from the rental numbers to increase on an yearly basis. So while the capital values have been stagnant or have seen only marginal increase, your rental numbers would grow anywhere between 8 to 12% on a per annum basis, depending upon the norm in that particular locality. So today you have a situation where your rental yields are higher than what is the general norm in the Indian market, and this is because the rentals have grown at a faster rate as compared to the property prices. Now, when we are trying to compute the affordability, what we are looking here at is that for a given locality, if you were to buy a house in that locality, assuming you buy a 1200 square feet apartment in any of these localities, and take 80% of the house value as loan for a 30-year period, computed at 9.5% rate of interest, then what is the monthly EMI that you are paying? And that EMI as a ratio or as a multiple of the rent that you are paying. So if we look at our affordability sheet, we have situation like Sarjapur Road and Electronic City, which have EMI to rent ratio as 1.6 and 1.7. What this basically means is that the EMI that you will pay here for a 1200 square foot apartment is 70% than the rent that you are presently paying in case of Electronic City, and 60% more in case of Sarjapur Road. So if you are thinking of buying, an apartment, if you're staying in these localities on rented accommodation, and if you're thinking of buying a property over here, then you will have to increase your outflow by 70% and 60% respectively, which might be doable. If you stretch yourself a bit in these localities. In case of other localities where the ratio is like 2.1 and 2.6, in those cases you will have to pay 100% or 160% of the rent that you're presently paying in those localities. So while you can stay on rent in those localities, it might not be possible to afford an apartment if the rent that you're paying is within a certain budget.
Consumers, everybody has a certain paying capacity and towards a house. You decide which place you want to stay in, and this particular chart actually helps you to understand that if you are staying in a premium locality and staying on rent, and you aspire to buy there, your outflow has to be roughly 100% or more if you want to stay there. However, there are many ways of entering the property market. You don't need to lose heart. If you want to stay in these localities, it is a person rents where he cannot afford to buy. But if you do want to invest in the property market, buy in those localities where you can afford to enter the market, because the market itself is not very expensive. That will allow you to enter the property market and also live in the localities that you can afford to stay in. Thank you so much, and let me quickly get on to the questions. Neha, can we have the first question, please?
Sure, let me read out a first query to you. The first query is from Rajni. She says that I have a 2 BHK flat which is on rent in Delhi's Uttam Nagar. I get monthly rent of rupees 12,000 from the property. Should I sell it out or should wait for the further price appreciation? The valuation of the property is rupees 60 lakh.
Rajni, Uttam Nagar is a classic case where I'm sure earlier you never got a rent of 12,000. Uttam Nagar's value has gone up after the Delhi Metro enter that locality, and there are 2 critical metro stations that are very close to it. As a result, what you have to look at is that today you're able to get 60 lakh for it. The value of the property has risen significantly over the past 2 years. Please use our tools. Come back to Magic Bricks, use our property rates and trends chart and see whether the value of the property is still rising. If the value of the property has risen significantly at one point of time and is now plateaued out, hold on for some more time, because this is a bad time to sell a property. I would say that what you should do is, if the values have more or less evened out, wait till the markets rise a little more, and if the value of Uttam Nagar versus other localities is more stable, then I think that is a good time to exit, because you would have got a good return on your investment in Uttam Nagar. Let's go to the second question. We've got Pratik Sharma, who says, I want to invest in a residential property with immediate possession in the Delhi NCR. My budget is around 1 crore. I require high and steady rental income and good appreciation on my investment. Please suggest a few options, including details. Pratik, the best thing for you to do is go to Magic Bricks, put your budget and search for properties within 1 crore. You will get a drop down of various localities. Please identify the localities that are on your list and start knocking out the ones that you don't want to invest in. As soon as you get you shortlist 4 or 5 localities, what you really need to do is now check the yield. We allow you to check the yield on PropIndex. Once you know what the rental values are, yield is nothing but a ratio of capital value to rental value. When you do that, you will figure out that if you have spent 1 crore, how much rent do you get every month? You can actually also do one more thing. Put a benchmark that I want to buy a property of 1 crore, but I should get a rental return of a certain amount. As soon as you know what is the size of the property and which is the locality that you're identifying, go to again use Magic Bricks to figure out what is the rental value in that locality. That allows you to assess what kind of return you're getting, and that is how you should do it. I keep telling people that nobody can tell you which property to buy. Property is a very individual decision. But what Magic Bricks does is provides you with a host of tools that allow you to take informed decisions. If you still have any queries, come back to our forum and post your query there, and we'll be happy to answer more of your queries and help you use data to make your own decisions. Manju from Delhi says, please do let me know the groundwork that Magic Bricks puts to compute the real estate related data.
The data that Magic Bricks receives can be broadly divided into 2 segments. One is the property listings that we have, of which we have more than 1 million property listings, active property listings across all the major cities in the country. This is the supply side data. Then we have the demand side data, which is basis the searches that happen on Magic Bricks, and we have more than 6 million searches that happen on property searches that happen on Magic Bricks on a monthly basis. Now we use this data and we further subject this data to a very rigorous check and balances to see that we remove all the outliers and we remove any wrong information that might have come or creeped into the system, and then we use the balance data to compute all the values and all the analysis that you see across Magic Bricks and in the reports that we come out with.
Manju, every time people post listings, there's a host of information that you put along with your listing. You tell us what size your property is, which locality your property is in, what is your expected value of that property. This allows us to understand how the seller's mind behaves, and there is also another. The search data tells us what the consumer is willing to pay. The property price is no one value. It depends on the amenities that come with it, the location of the property. Even within a certain tower, you will find different properties have different prices. because we get all this data fed in and in very large volumes, we can actually use various data sets and keep playing around with the data to help you understand how property works in this market. There is Abhishek Ranjan who says, I am a potential buyer but holding back only because data projects that the area that I am investing into has not seen any appreciation. Ideally, how should I read the market? Should I read the market over the last 2 years or more? Abhishek, over the last 2 years, the markets have been very, very steady. They haven't risen much. If you, like Rohit told you a little while ago, index to inflation, you can even say that values have gone down because the inflation has overtaken the rate of rise of value of property. However, if you want to make a decision and figure out how properties have done, remember I told you earlier, property is a 5 to 7 year cycle. In this cycle, the values go up, go down. So short-term changes do not make much of an impact. If you want to get the best out of property markets, you should be invested through a full cycle so that you, in the next cycle of up, you get much more returns than what you've invested. You always make money in a property market if you hold on for the right period of time. But if you want to know property values over a period of time, Magic Bricks, like I told you, has 18 straight quarters of data. If you go to propindex.magicbricks.com, you can see values of 18 quarters ago. That gives you a much longer time frame in which you can assess how the markets have done locally. This is the value of data so that you're not making a shot in the dark. You use data and figure out when to enter or exit the markets. We've got Pooja Sharma who says, does your data indicate the best time to exit the market?
The best time to exit the market, is more dependent upon the kind of return expectation that you have as an investor. So if you feel that you have managed to secure the kind of returns that you had in mind when you were investing in a property, and you can transact the property in a meaningful time frame, then you can think of exiting the market. Apart from that, what you can also do is, if you want to still hold on further, you can look at the property price trend data, and if the market is if the market is going up, you might want to hold onto it further and exit at a higher level. Or if you see that the market is going to go down and and the property prices are going to reduce over coming time frame, then it might be a good indicator to exit your investment.
Selling in a recently, Magic Bricks launched a book along with HarperCollins called How to Buy a House. Here we allowed you, each chapter tells you what are the considerations that you should keep in mind before you buy a house and before you sell a house. Now, selling a house is a far more difficult prospect than buying a house, because here it is a question of, are you exiting at the right time? Property markets, like I said, is cyclical. When the markets are flat and consumer demand is low and supply is high, the more supply there is in the market, the more the buyers will negotiate with you. If you are a seller, the consumer, you know that the buyers are going to come and ask you for a drop in the values of your expected values of the property. Therefore, it is always better to let the market stabilize a little more, let people start buying so that the volume of supply comes down and the amount of discrepancy between supply and demand gets fixed so that you get better values for your property. It's a complex subject, Pooja, but do use all the tools that we have given you and come to advice.magicbricks.com. There are lots and lots of places where you can use tools. We have provided you with tools that allow you to play around with the data. We analyze the data, we clean up the data and make it available to you so that you can use it and make your own choices. Krishnansh Pandey says, how do you shortlist the localities for PropIndex?
See, every city, the number of localities in every city is much larger than what is used in PropIndex. However, the consumer demand and the development activity is concentrated in lesser set of localities. So what we do is we choose those localities which have a certain number of actively traded properties, as well as there is a certain share of the consumer demand for those localities. So these are localities where either a certain amount of development activity is happening, or the consumer is interested in knowing about these localities. These are the localities that we pick up. So in case, for example, in case of Bangalore, while Magic Bricks has more than 250 localities in Bangalore for which we provide data, we have chosen 94 top localities which comprise the bulk of consumer demand and the supply in the Bangalore market. So the index that you see actually reflects the price movement across the most important localities for any given city.
There is Prashasti who says, should I be investing in ready to move in properties or under construction properties? I'm planning an investment in Noida sector 168 under construction properties or established part of Noida with resale properties. Now, Prashasti, there are two things that you should consider. The Noida market is one which is going to see a huge influx of new properties. It has already seen a lot of new properties coming up to possession stages or very close to possession stages. The older properties are significantly older, and there is an aging process as well. However, older properties are closer to the commercial districts where there is established commercial activity happening. As a result, there is demand on both sides. There is demand for older properties on resale because these are closer to workplaces. There is demand for modern new apartments along the expressway and so on. When you choose which locality to buy, if you are an investor, think about which one will give you best rental returns. We find that the demand that is driven by young professionals who come to the city to work here and live with all the lifestyle amenities that new properties offer, as in clubhouses, entertainment options, access to transport corridors, access to various other lifestyle activities, they seem to prefer newer localities. Where you have large family sizes, you will find that is where we look for standalone properties. In Noida, also remember that resale properties, if you're buying on plotted developments, you can't buy a single floor. According to the rules, each plot is one unit. You can't sell single floors. Therefore, you won't be able to enter and buy a smaller unit in old properties. After this, what we would suggest is come to Magic Bricks, come to PropIndex, check out the property values and see which one suits you the best. Arvind Pandey says, I have an under construction property and wish to sell it. But is this the right time to sell? How do I read your data for this?
See, our analysis has shown that almost across all the cities, under construction properties are at a discount to ready to move properties. The reason being that the under construction properties or projects have seen delays in possession or delivery, and a consumer who is looking to buy a property for self-use does not want to take that risk, and he wants to he is opting for ready to move in properties which can be occupied at the earliest, and he does not have to bear the twin burden of paying the EMI as well as the rent for under construction property, and which is getting delayed. So in present market, if you try and sell an under construction property, the chances are that you will have to offer it at a discount, provided you get a consumer in the first place. So this is if you have invested in the property and are not exactly in a requirement of capital for some other use, it is advisable that you stay invested and ride out this phase in the real estate market, because chances are that you will not be able to recover your investment even. So might as well stay put and for another couple of years when the market turns, and at that point in time look at exiting the property.
You must also remember that when you have an under construction property, there are many stages. If your property is from a developer who is delivering on time, and if your property is going according to the scheduled plan, you have nothing to worry. But you can see that the end user is today looking for properties that are in the ready to move in phase. Maybe a good time to sell your property would be when your property comes into the possession stage, and at that time, if you don't need it for self-use, why don't you exit and exit the property? You will get the best value for your property. There is Roshan who says, I own an apartment in Pimple Saudagar in Pune. How much rental returns can I expect? Roshan, this is where you need to service yourselves with the data that MagicBricks provides. Go to the Pune section of magicbricks.com, put the size of your apartment and select Pimple Saudagar as the locality. You will see what are the options that you get, and check out what the rental values, prevailing rental values are. That, since there is a whole host of rental values that come, you will be able to assess what is closest to the property that you own. This is exactly how MagicBricks also advises you. We make these tools available to you so that you don't have to do a lot of make a lot of effort. We have a buy versus rent calculator. We have we show rental graphs. These tell you how rents have moved, and you can actually figure out how much rent you can expect, so that you ask the logical rent and you'll be able to put your house on lease faster. There is Nikhil who says the localities offering healthy rental returns are better for investment. Kindly tell me the localities with best rental return values in Bangalore. Nikhil, we'll go back to our presentation and we'll show you how to use the values that we've shown you. Neha, if we could show the presentation.
Can you hear me?
Yeah, I can hear you. We're just showing you. Nikhil, we're showing you how to use the data that we've given to you. Which one do you want? Okay, we are showing you on your screen. You can see the top 10 localities by supply and the rental yield that you get out of this.
Yeah. So what you have in front of you is the list of top 10 localities by supply in Bangalore, and these are the localities which pretty much are the center of maximum or most development activity in Bangalore as of now. So if you see, if you look at Sarjapur Road and Electronic City, where the rental yields are 5%, which are likely to be amongst the highest in the country. So a 5% yield on rental income in present market, when the capital value in Bangalore has barely increased by 3 to 4% over a 2-year period, shows that these are the localities that you can look at from an investment perspective. So there is still an advantage that you can have, since the prices in these localities have been stagnant for last 2 years. You will be able to get a property which is fairly priced, and you also have a scope of good negotiation. And at the same time, since the rental yields are pretty high in these areas, you will get your return basis the rental yield while when the capital appreciation is low.
It's like this. You spend less to enter that market, and buyers net spend more to live in those markets, because those are in demand localities. These are the top in demand localities where we have supply and there is steady rental demand as well. Let's go on to the next question. Neha, if you could give us the next question, please.
Sure. Let me read out to you the next question. It's from Sundar Rajan from Pune. He says, I'm interested to buy a 900 square feet plot in Chennai. What price appreciation I can expect in future? I want to invest only to earn returns.
Rajan, when you buy a plotted development, and if you're buying a plot, please buy from those developers who have it within enclosed boundaries so that the safety of your plot is ensured. The second thing is that you should buy in those areas where there is future development potential so that there is a steady rise in your in the growth of your properties. The third thing that you should look at is that you must look for growth in your growth in your leveraged value, which means that you buy at a certain price and you're waiting for the price of the property to go up so that you will be able to get a good return. In the case of plotted developments, remember that you don't get any regular rental returns. You only have to get what is given to you by the plot's appreciation in value. Normally, a 5 to 7 year cycle helps, but going by the current economic trend, you have to wait till the prices start rising. And it's not just start rising, but there you determine what kind of returns you're looking for and exit only when those returns happen. Neha, next question, please.
Sure. It's Rahul Sai from Delhi. He's asking, I'm planning to invest in Hyderabad, but I want to know about the price trends and rental income in the area. In Although he has not mentioned the area name, but he would like to know the price trends and the rental trends in Hyderabad. So, would you like to suggest him?
Yeah, Rahul, it's like this. The Hyderabad market has been a very, very slow market because it had a lot of political issues that it was contending with. Today, after the Telangana issue has been resolved, you find that there is a lot of clarity about the Hyderabad market, and values have still not started going up because currently Hyderabad is the capital of two states, and there are a lot more policy issues that have to play out before that market rises significantly. However, the amount of commercial space that has been taken up in 2015 in Hyderabad city shows that the city is poised for a quantum leap in IT and development growth, IT development growth. As this translates into more jobs, which translates into more people coming into those areas. So if you are looking to invest in Hyderabad, buy around those places where commercial development has peaked and where there has been a lot of commercial space that has been taken up. These have been reported in the media, large commercial spaces that have been taken up. Do read up and do your research before you buy in the Hyderabad market. We've got Sundarajan from Pune who says, no, I think we've taken the Sundarajan question, sorry. Aman wants to know, will infrastructure boost add to my property? Is there a time lag before it actually takes place? There certainly is, Aman. That's a really good question. While we keep telling people to buy where the infrastructure is coming up, infrastructure can be broadly divided into city infrastructure, which means water, power, sewerage, drainage, all these facilities that go with urban infrastructure. It also means the physical infrastructure, which means transport infrastructure, which is roads, highways, flyovers, metros, and so on. And it also means that if there has been a physical upgrade in that area, the pavements have been repaired, the roads have been repaired, it's become easier to live in, traffic has been streamlined. All this is infrastructure, and each one of these boosts the values of your property. Why does this do this? People prefer to live in those areas that are comfortable to live, where you don't have to contend with civic issues, which means that if there is a sewerage problem and there is stagnant water in some areas, it not only is an eyesore, it also leads to health issues, and people don't like to live there. The minute that is sorted out by either a new sewerage line or expansion in capacity or something, you find that the problem goes away and people start living there. Similarly, if the metro is a big boost to civic values, if you find that a metro is announced, While during the period, metro normally takes 4 to 5 years for construction. During that period, we find that there is a drop in demand, and there is also a drop in rental values, because it is inconvenient to stay where there is intense construction activity happening. However, towards the last year of the metro construction, you find first rental values going up and then capital values going up. And once the metro is up and running, you find that there is between a 10 to 25% jump in property values. This is the impact of infrastructure on property values. We've got Pankaj, who says, are supplies still exceeding the demand in Noida? What are the current rates?
The supply is in excess of the demand in Noida market, and this has been a case for quite some time. Rather than what has actually happened is, while initially the momentum of supply continued when the market was good at the same level, the demand has petered off because of the slowdown in the economy. What that has led to is a situation where a lot of unsold stock is lying in the market. While the fresh addition of properties in the market has reduced, the unsold stock, which is in various stages of construction, is still present in the market, and this is what is leading to a situation where the property market is stagnant in terms of prices, because the transactions are not sufficient to clear this unsold stock.
Pankaj, you also have to see that in Noida, only about 25% of the projects have actually handed over possession. About 75% of the new stock is still in various stages of construction and development. When all the stock enters the market, which it is expected to do over the next 3 to 5 years, 1 year to 5 years actually, you will see that there's a steady increase in supply in the market. It's not that the Noida market doesn't have demand. It has good economic drivers, and there is a lot of intrinsic demand in Noida. As a result, both the rental markets and the capital markets are expected to continue to perform steadily, but you will not notice a big rise in values in any place because there is more stock. The more supply there is in the market, the more stable the market will be, and it is good for end users. Therefore, if you are an investor, purely an investor, Noida is not the market to look at. If you're an end user, do look at Noida. There is plenty of supply, and you'll be able to negotiate good rates. Manas asks, did property prices drop in Delhi? If so, which are the localities? Manas, property prices have dropped in Delhi. However, the rate of drop of prices in different localities is different depending on the supply and depending on the demand. Now, in localities such as Dwarka, where there was a lot of fresh supply that entered the market a few years ago, and where there has been a lot of infrastructure development, you find that property prices have dropped from their peak values, but not really dropped significantly. In many South Delhi areas, where prices had gone up inordinately, those are the places where we've seen a lot of price correction happening. However, whatever the asking rates in Delhi, there is no real logic why prices are what they are in the Delhi market. The cost of construction is a certain percentage of the property value. The rest of it is the opportunity cost, and sellers in Delhi have loaded a lot of the opportunity cost onto the price of the property, because there is no fresh supply, not so much fresh supply that can come across Delhi. As a result, because Delhi cannot grow, it's the NCR around it that grows. Therefore, the Delhi market's prices are determined by what the seller determines is the value of the property.
Jayshree, I'm really sorry to interrupt. I think we are about to close the session. We can just take up a last query now.
Yeah, let's take a last query. There is Harish, who says, are prices moving up in Noida and Greater Noida localities? How can we understand the property market in these localities? Is there any research report that can help this case? Harish, Simple logic. Go to Magic Bricks, go to propindex.magicbricks.com, check out our Noida and Greater Noida reports, read the last so many volumes that we have put up for you. Once you've read these, if there's further information that you require, please come back to us and we'll be happy to answer your queries. Thank you so much, Neha. Over to you.
Thank you, Neha.
Thank you. Thank you so much to the speakers. It was really an insightful presentation, and the session indeed was a great session. I would also like to thank all our participants for their support in making this webinar a success. The recording of the webinar will be available on Magic Bricks by tomorrow. This is Neha Nagpal, the moderator of the session, signing off. Thank you all.
Thank you.